think about insurance for a moment. It's been around for centuries, right? Built on predicting risk, an industry that's essentially been a financial backstop when things go wrong. For most of its history, it's been pretty stable, maybe even a bit, stayed. But what if I told you that the very foundation of how it works is being completely rewritten right now, as we speak? It's like the entire rule book is just being tossed out and a new one written in real time.
It's absolutely true. We are witnessing what you could only describe as the most profound transformation the insurance industry has, ever experienced, to date anyway. This isn't just tweaking old processes for a little bit more efficiency. It's a fundamental reimagining, a complete paradigm shift, really. And it's driven by the relentless march of digital transformation and the ever-increasing intelligence of artificial intelligence. It's truly a pivotal moment.
That's exactly why today we're doing a deep dive into how artificial intelligence isn't just optimizing insurance, making things a bit faster or maybe cheaper. It's fundamentally redefining its core purpose, its very reason for being. We'll be exploring a fascinating set of sources, from comprehensive industry reports, strategic analyses, to some really compelling real-world case studies, all to uncover what this profound shift truly means for you, the policyholder, and maybe for the entire concept of risk itself.
And, to really set the stage for this discussion, I think it's crucial we clarify the relationship between digital transformation and AI within insurance. Because a lot of people hear these terms, maybe use them interchangeably, but they're distinct yet utterly dependent on each other. Think of digital transformation as the foundational layer, the infrastructure, if you will. This means digitizing everything: customer portals for claims and policies, internal systems for managing claims, underwriting, customer service. It's about creating a streamlined, paperless, sort of interconnected environment. And that generates vast quantities of rich, structured data.
So it's the groundwork, right? Like laying the foundation before you build the house, creating fertile ground for something else.
Precisely. And that something else is AI. AI is the intelligence layer sitting right on top of that digital foundation. It's the brain, you could say, that sifts through all that raw, digitized data, and it turns what would otherwise be just a massive pile of information into actionable insights, powerful predictions, automated actions. Without a robust digital infrastructure, AI just can't reach its full potential. It'd be like having a super fast, incredibly smart, self-driving car with no roads to drive on. Conversely, without AI, digital transformation risks becoming just a very efficient digital filing cabinet. They're truly symbiotic. One fuels the other, each amplifying the other's capabilities.
Okay, so let's jump into this new paradigm then, because what's happening here, it's not just operational tweaks, it's a massive philosophical shift too, isn't it? It really alters that fundamental relationship between you, the policyholder, and your insurer.
Indeed. Historically, for centuries, really, insurance operated on what we call a detect and repair framework. Simple idea, really. You, as a policyholder, paid your premiums, and if something bad happened, a car accident, a house fire, a serious illness, the insurer stepped in after the fact. To compensate you for the loss, it was all about pooling risk among many people and then adjusting prices based on historical data, trends, actuarial tables. The whole focus was on responding to loss, compensating for damage already done.
And for a long time, that model worked. It was an effective financial safety net. But now AI is completely flipping that script. It's enabling this revolutionary predict and prevent model. So instead of just reacting to bad outcomes, insurers are now actively working to help you avoid those outcomes altogether. And the truly remarkable part is how. It's because AI can analyze these massive real-time data streams from an explosion of connected devices, things we couldn't even imagine a few decades back. We're talking Internet of Things, IoT smart home sensors, sophisticated telematics in cars, even personal wellness wearables like Fitbits and smartwatches.
That's where the rubber meets the road, exactly. So for instance, imagine smart home sensors detecting a tiny water leak in your pipes, maybe a slow drip behind a wall somewhere. And it immediately sends an alert to you, maybe even directly to your insurer, long before it turns into a catastrophe flooding your basement. Or think about vehicle telematics. It's not just about pricing your policy based on how much you drive anymore. Now it can provide you with real-time feedback, maybe coaching. A little nudge on your smartphone, perhaps, encouraging safer driving habits, potentially preventing an accident altogether. It's a fundamental shift from waiting for bad things to happen to actively trying to stop them.
It's a complete game changer, isn't it? I mean, this isn't just a technical upgrade or a slightly faster claims process. It's transforming the insurer's fundamental role in your life. They're moving from being, a passive financial backstop, only there when things go really wrong, to in becoming an active, engaged partner, a partner in your well-being, your safety, your overall risk management. They're becoming part of your everyday life almost, helping you live more safely and securely.
And this transformation, it's not just some fascinating tech curiosity or a nice-to-have feature. It's an economic and strategic imperative for the whole industry. The financial stakes involved here are truly monumental.
Absolutely. Just think about your own experiences as a consumer outside of insurance.
Mhm.
Your expectations have been totally reshaped, haven't they?
Yeah.
By the seamless digital stuff you get from retail, banking, streaming services. You expect things hassle-free, self-service, super personalized, incredibly fast, almost instant. And now you instinctively expect that same level from your insurer. And the market shows it. Studies show a significant chunk of customers are actually willing to switch, ditch their long-standing insurers for newer insurtechs, specifically because they offer these better, easier digital experiences. People are voting with their wallets for better tech.
And the numbers really back this up. They vividly illustrate AI's role as the primary engine for future growth, profitability, competitive edge in this sector. One analysis estimates AI technologies could add up to, wait for it, $1.1 trillion in potential annual value for the global insurance industry.
A trillion.
Yes, $1 trillion. It's staggering. And if we zoom in just on generative AI, Gen AI, its market potential alone is projected to hit $15 billion by 2025, just in insurance and finance. What's fascinating here is how these figures position AI. It's not a luxury anymore, not a marginal efficiency tool. It's the core driver of future success. A non-negotiable, really, for anyone wanting to stay competitive. It's truly a defining moment.
But this radical shift, it brings us to a really interesting philosophical quandary, doesn't it? It gets right to the heart of what insurance has always been about.
Yeah.
Traditionally, insurance is built on risk pooling, solidarity, the idea that premiums from a large group cover the unpredictable big losses of a few. It's a collective safety net, right? We all chip in to protect each other, knowing we might not have a big loss this year, but someone will, and our contributions help them.
But this raises a really important question. AI-driven hyper-personalization using incredibly granular data to price risk individually directly challenges that whole concept of collective solidarity. As your premium becomes a precise, almost real-time reflection of your unique behaviors, your specific risk factors, how you drive, how often you exercise, the smart devices in your home, that traditional mechanism of mutual support, it fundamentally weakens. If I pay way less because I'm a perfect driver and you pay way more because you're statistically riskier, is that still solidarity? Does the industry just become a purely transactional service, individual risk management, everyone for themselves? Or does it find new ways to maintain that societal role, that collective sharing, especially for those AI deems high risk?
That's huge. It really opens up debates, doesn't it, about the uninsurability of people deemed too high risk by these models. It forces us to think about, well, maybe new public-private insurance models, or even government intervention, to make sure everyone still gets essential coverage, especially with things like climate change making some risks much more concentrated. It's not just a bucket question. It's a profound societal one about fairness and collective responsibility. Okay. Moving on then. Let's talk about how AI is actually transforming the nuts and bolts, the entire insurance value chain. Yeah. It's not just one area. It's hitting every single link. Right from when you first think about buying a policy all the way to getting a claim settled.
Exactly. Let's start with underwriting and risk assessment. That's really the core of what insurers do, right? Evaluating and pricing risk. Traditionally, this was super manual, labor-intensive, often subjective, relied heavily on limited historical data, took days, maybe weeks. Could be slow, sometimes prone to human bias or just missing things.
And now, AI is automating and augmenting that process in, well, incredible ways. It's fundamentally changing the scale and speed. Think about it. A human underwriter, working hard their whole career, might review, 10,000 policies, max. An AI model can learn from and analyze data from millions, even tens of millions, of policies in a tiny fraction of that time. It spots subtle patterns, complex correlations, hidden links that are just impossible for a human to see. This doesn't mean humans are obsolete, though. It means they're freed up for more strategic, complex decisions. Moving from rote processing to high-level strategy and nuanced problem-solving. It's augmentation, really, not replacement.
What's truly transformative here is how AI enables genuinely data-driven decisions. Underwriters can now pull in vast, diverse data sets, way beyond the old actuarial tables. We're talking alternative data sources, public social media activity, credit info, detailed geospatial data, and of course those real-time streams from telematics and IoT devices. This creates a much more holistic, dynamic, and accurate picture of risk than ever before, allows for more precise pricing, better risk management.
And this leads directly to dynamic, personalized pricing. We're seeing a big shift from static annual prices to flexible dynamic models, like usage-based insurance, UBI, especially in auto. Your premiums get linked directly to how you actually drive mileage, speed, braking, even time of day. This not only makes pricing fairer, reflecting your actual risk, but it actively incentivizes safer driving. It becomes a win-win for the insurer and you.
And we've got some amazing real-world examples of this impact. A major U.S. property and casualty insurer, for instance, used AI to analyze new auto policies. They projected over $30 million in annual underwriting mitigation. That's savings, basically. The AI was incredibly good at spotting sophisticated misrepresentation by applicants and even uncovering large networks of ghost brokers.
Ghost brokers, what are those exactly?
They're essentially fraudsters. They either trick people into buying totally fake insurance policies or they manipulate legitimate ones to make money illegally.
Yeah.
The AI's ability to cross-reference data points and spot unusual patterns was just something their old systems couldn't do, a real game changer for preventing fraud right at the start.
$30 million. That's a huge impact. Protects honest policyholders, too. And it's not just about stopping bad stuff, right? You mentioned Data Life in Japan. Their AI actually visualizes its decisions.
That's right. It tackles the black box problem head on. Human underwriters can actually see the AI's reasoning, which is crucial for building trust, debugging, and regulatory compliance. Another example, a European P&C insurer. Their AI generated 3 times the expected number of relevant policy risk alerts in just 5 months. It identified over $1 million in potential impact from reduced premium leakage and fraud.
Premium leakage, that's money lost from mispriced policies or errors.
Exactly, or undetected misrepresentation. The AI found hundreds of risky policies that humans had already reviewed and missed. Just shows its analytical power.
Okay, so that's underwriting. Now, moving from getting the policy to when you actually need it, claims management. This is the moment of truth, isn't it? And AI is revolutionizing this too, aiming for what you call touchless claims.
That's the ultimate goal, yes. Starting with the first notice of loss, or FNOL. That first report you make after something happens, usually a stressful time. What used to be a manual, phone-based thing, waiting on hold, explaining everything, is now often handled by AI virtual assistants and chatbots, using sophisticated natural language processing, speech recognition. These bots give instant, 24/7 support. They collect details, answer common questions, guide you, route your claim. Often they complete the initial steps with 0 human intervention. Imagine chatting with a bot after a fender bender, and it just handles the first steps instantly.
And the visual stuff sounds impressive too. Intelligent damage assessment.
Yes, computer vision. AI that's trained to see and interpret images and video, but with incredible speed and consistency. It analyzes photos or videos of damaged cars or property you send from your smartphone. Deep learning algorithms identify the damage, estimate repair costs accurately, and sometimes even trigger automated payments for simple stuff. This hugely reduces the need for physical inspections by adjusters, which speeds things up for you, the customer, and cuts costs for insurers.
Exactly. It all adds up to straight-through accelerated processing. That old manual process, tons of paperwork, could take 30 days or more. Now, AI systems can process claims in 1 to 15 days, and sometimes in seconds. That famous lemonade example. Processing a claim, filing to payout in just 3 seconds. All AI. Think about that, 3 seconds. That just completely resets customer expectations, doesn't it?
It really does. And a great case study from a Nordic insurer using EY's AI platform highlights the efficiency game. They hit a 70% rate of correct, automated data extraction from complex, unstructured claims, documents, medical bills, police reports, estimates. The AI instantly pulls key info that a human would have to manually read and type out. This speeds up decisions, lets human agents focus on higher value stuff, empathy, negotiation, complex judgment. Ultimately, this leads to claims processing that's, say, 80% faster, 20-25% lower adjusting expenses, and crucially, much better customer satisfaction during those critical moments.
Now, let's tackle a huge issue for the industry and, frankly, for all of us policyholders. Fraud. The cost is just staggering. It impacts every single one of us.
Yeah.
The Coalition Against Insurance Fraud puts it over $308 billion annually in the U.S. alone.
Wow.
Yeah. Even the FBI's more conservative estimate is $40 billion a year. Spread that out, and it adds $400 to $700 to the average family's yearly premium. It's literally money out of our pockets.
And AI has really emerged as the industry's most powerful weapon here.
Oh.
Humans just can't process the sheer volume of data or connect the dots quickly enough. But AI and machine learning algorithms, they can analyze billions of data points across the entire portfolio claims, applications in real time. They're incredibly good at spotting subtle anomalies, hidden relationships, complex patterns that signal fraud, stuff that's basically invisible to humans, like digitally manipulated photos, deceptive language patterns in calls or statements, weird claim frequencies, even uncovering organized fraud rings by analyzing networks of seemingly unrelated people who are actually working together.
And crucially, AI shifts this from reactive investigation finding fraud months after the money's gone to proactive real-time prevention. AI models can flag suspicious applications or claims right at the point of entry, stop the loss before it even happens, or at least before it gets big. That's a massive game changer for protecting honest policyholders and keeping premiums manageable for everyone.
And beyond just the operational nuts and bolts, the customer experience and engagement side is also getting a huge makeover, largely because we all expect those seamless digital interactions now, like we get elsewhere.
It's all about seamless omnichannel journeys, no more siloed interactions. Your experience with your insurer needs to be consistent, integrated across every platform. Start a quote online, finish on the app, file a claim via chatbot. All your data and context should follow you. Makes it effortless, personalized, like the system actually knows who you are or what you're doing, wherever you pick up the conversation.
And conversational AI, those chatbots and virtual assistants, they're right at the front line, delivering that effortless experience. Instant, 247 support for basic questions, routine transactions, even policy education. It boosts immediate satisfaction, no more frustrating wait times, and really enhances scalability for the insurer. Frees up human agents for the complex, empathetic stuff that needs a human touch.
And beyond just support, AI enables this incredible hyper-personalization. By analyzing all sorts of your data browsing patterns, life events, claims history, how you use their tools, AI models can deliver truly personalized recommendations, suggesting add-ons that actually make sense for you, tailoring marketing so it feels relevant, not spammy, even providing proactive advice, like reminders for preventative home maintenance. This deep understanding fosters loyalty, and studies show it improves retention rates by about 15%. It's about building a relationship, not just a transaction.
Okay, now here's where it gets really interesting, strategically speaking. The impact of AI across this whole value chain is creating a new competitive dynamic. We're seeing this powerful AI flywheel effect emerge, a virtuous cycle.
Unpack that flywheel for us. How does that virtuous cycle actually work for an insurer?
Right, so imagine an insurer invests heavily in a superior AI underwriting model. Because their AI is better at assessing risk, identifying good risks precisely, they can offer more competitive premiums to those lower risk people. That attractive pricing naturally pulls in more of these desirable customers. Now, here's the key part. These new, lower-risk customers, by interacting and providing their data, feed more high-quality data back into the system. This enriched data then refines the AI model even further, making it even better at risk assessment, fraud detection, personalization, and the cycle repeats. It builds momentum, creates a powerful, self-reinforcing competitive advantage over time.
And the flip side is true too, isn't it? Insurers with weaker models get stuck quoting for riskier pools.
Yeah.
That's adverse selection, right?
Exactly, adverse selection. It forces them to charge higher premiums, which drives away more good risks to the AI leaders and degrades their own data pool. This feedback loop creates a significant widening competitive moat for those leading with AI. It almost suggests a future where data-rich AI-native insurers could really dominate. A winner-takes-most scenario, maybe.
Wow. Okay. And at the same time, as automation spreads, like in claims, there's this new operational risk, automation bias.
Yes, automation bias among human employees. AI systems are increasingly used as adjuster assistants, right? They triage claims, summarize complex files, recommend next steps. The danger is, as these systems prove reliable, human adjusters, maybe underwriters too, might start to over-rely on the AI's output, just accept its recommendations without applying their own critical judgment or expertise.
Risky win.
It's particularly dangerous with complex, novel, or edge cases where the AI's training data might be thin, or where human empathy and nuanced interpretation are really crucial. An adjuster blindly accepting a wrong AI recommendation could approve a massive overpayment that's claims leakage, or, just as bad, unfairly deny a valid claim, leading to huge customer dissatisfaction, potential legal issues.
So how do you counter that?
Well, recognizing this, new regulations like the EU AI Act explicitly mandate meaningful human oversight for high-risk systems. Insurers have to design AI systems not just to give an answer, but to show the evidence and rationale. compel the human expert to engage critically, understand the basis, and make the final informed call. This also means training needs to evolve. It's not just about teaching process steps anymore. It's about cultivating critical thinking skills to collaborate with, challenge, and effectively supervise these new AI partners.
Okay, so just to quickly summarize the sheer business value AI brings across the board. The numbers are pretty compelling. Underwriting. Potentially up to 50% lower costs, better risk selection, lower losses, claims, 80% faster processing, 20–25% reduced expenses, and a huge 30–50% drop in fraud and leakage. Customer engagement, lower service costs, plus increased loyalty and retention. These aren't small tweaks. They're foundational shifts redefining profitability and customer relationships. Now let's dig into how AI's impact varies across the different lines of business and insurance, because it's definitely not a one-size-fits-all approach, is it? Different types of insurance just have different data, different risks, different rhythms.
Precisely. Let's start with property and casualty, P&C. That covers tangible stuff.
Mm.
Auto, home, commercial properties. This area is really fertile ground for AI. Why? Because it deals with frequent, observable, quantifiable data. Perfect for AI's analytical strength.
And auto insurance is maybe the clearest example. The telematics revolution is key there.
Absolutely. Using sensors in your car or even just sophisticated smartphone apps to track driving behavior, mileage, speed, acceleration, braking, cornering. Insurers move beyond old proxies like just age and postcode. AI algorithms analyze this continuous stream of granular data to create hyper-personalized risk profiles and premiums. That's usage-based insurance, or UBI. And in claims, computer vision is speeding things up dramatically. You snap photos or video of damage, AI analyzes it, gives an instant, accurate repair estimate, often skips the need for a human adjuster inspection entirely. It's like an expert eye, instantly.
Okay, and for homeowners insurance, AI is pushing towards proactive loss prevention.
Exactly. Driven heavily by the Internet of Things, IoT, smart home sensors detecting tiny water leaks, smoke before a fire spreads, unauthorized entry. These systems send real-time alerts to you and the insurer, allows immediate action before a minor issue becomes a major loss, saves potentially thousands in damages, prevents huge disruption. It's about stopping disasters before they happen.
And on the underwriting side for homes, using satellite images.
Yes, high-resolution aerial and satellite imagery for geospatial analytics. AI systems can instantly, accurately assess property characteristics and external risks, like roof condition, is there a pool, the property's specific wildfire risk based on nearby vegetation, all without a physical inspection. Incredible efficiency and accuracy, allows much better pricing and prevention advice. Then you have commercial lines, much more complex bespoke risks usually. Here, AI provides powerful tools for underwriting, analyzing huge data sets to underwrite large properties, evaluate complex supply chains for vulnerabilities or geopolitical risks, assess various business liability exposures. Plus, AI-powered catastrophe models can simulate the financial impact of major events, hurricanes, earthquakes, cyber attacks, helps insurers price risk better for big clients and manage their overall portfolio exposure, vital for businesses with complex operations.
And the newest wave, generative AI or Gen AI, that's set to have a huge impact in P&C claims specifically.
Immense value, yes. Some estimates project over $100 billion in benefits just for P&C claims, driven by reducing loss-adjusting expenses by 20–25% and claims leakage by 30–50%. Think about AI co-pilots that can instantly summarize super complex demand packages in lawsuits, transcribe adjuster-claimant calls in real time, draft follow-up emails based on the conversation, even provide real-time coaching and knowledge support for new adjusters, helping them ramp up way faster. Huge impact on efficiency, costs, and getting claims resolved quickly benefits everyone.
Okay, shifting gears now to life insurance. You said this sector has been historically more conservative, slower on the uptake with AI.
That's generally true. A 2021 survey showed only 58% of life insurers using or planning to use AML. Compare that to 88% in auto, 70% in home. The caution often comes from the long-term nature of policies, the deeply embedded traditional underwriting processes. But despite that lag, AI is making significant inroads now, especially in underwriting.
That makes sense, because the traditional life insurance application process is famously slow, often invasive, paperwork, medical exams, weeks or months of waiting.
Exactly. AI is revolutionizing this with accelerated underwriting. AI platforms ingest and analyze application data, digital health records, prescription histories, other external data to automatically assess risk and classify applicants much faster. This can shrink policy issuance from weeks down to minutes or hours for many healthy people. A massive improvement in customer experience lets insurers onboard clients way quicker. A real leap forward.
And beyond just speed, AI allows for a more nuanced risk classification, using data from wearables.
Yes, integrating anonymized data from fitness trackers, wellness wearables with explicit consent, of course. AI models can factor in lifestyle things like activity levels, sleep patterns, heart rate data. This lets insurers reward healthy behaviors with lower premiums, fosters a more collaborative relationship where your good habits actually pay off, incentivizes better health.
And it enhances the customer journey overall in life insurance, too.
Definitely. Virtual assistants guiding applicants through complex forms, ensuring accuracy, reducing frustration. Plus, predictive models analyzing customer behavior to spot those at high risk of letting their policy lapse. Allows proactive retention efforts, personalized outreach, educational resources to keep valuable long-term customers.
Okay, finally, let's look at health insurance. Huge data volumes, complex billing codes, constant interactions. Sounds like a prime candidate for AI.
Absolutely. The complexity makes it ideal for AI applications focused on efficiency, cost reduction, and data-driven health management. Benefits everyone, members, providers, payers.
So a big impact is streamlining payer operations, the insurer's administrative side.
Right. AI excels at automating high-volume tasks. Claims processing and adjudication, instantly validating claims, checking coding, approving payments for simple cases. AI also streamlines that cumbersome prior authorization process, which often delays patient care, and it handles member grievances and appeals more efficiently, reduces administrative friction significantly.
And AI enables this shift towards predictive health analytics.
A powerful shift, yes. Analyzing vast, anonymized datasets claims, electronic health records, pharmacy data. Predictive models identify members at high risk for chronic conditions like diabetes or heart disease. This allows targeted outreach, offering preventative care, wellness programs, improves long-term health for members, reduces future high-cost claims for the insurer. It's moving from reactive treatment to proactive wellness.
Makes sense. And creating more personalized member journeys.
Yes, AI can proactively suggest underutilized benefits tailored to your health profile, promote relevant wellness programs, provide instant 24/7 support for benefits questions via conversational AI. It's about getting you the info you need, when you need it, easily. Makes the often confusing world of health benefits much clearer and more supportive. And critically, AI is a huge help in combating fraud, waste, and abuse. Costs the U.S. healthcare system tens of billions annually. Machine learning models analyze billing patterns across millions of claims, spotting suspicious activity billing for services not rendered, upcoding procedures to inflate costs, even detecting organized fraud schemes across providers or patients. Helps protect the system's integrity, ensures resources go to legitimate care.
So it's really clear that a one-size-fits-all AI strategy just won't cut it across these different lines. Insurers really need to tailor their investments, prioritize use cases based on the specific data, the business rhythm, the risk profile of each line. Smart, targeted deployment is key. Okay, so we've painted this picture of immense potential, incredible benefits AI brings. But let's unpack this a bit, because the journey, it's not exactly smooth sailing, is it? There are significant speed bumps. Starting with the purely technological hurdles, maybe the biggest one, especially for established players, is the legacy system anchor.
Oh, absolutely. Many traditional insurers are running on these monolithic, decades-old mainframe systems. They're inflexible, incredibly hard to integrate with modern AI tools, and super expensive to maintain or replace. They really do act like a powerful anchor, just dragging down innovation efforts, like trying to run a supercomputer on dial-up, basically.
And even if you get past the legacy systems, you hit the wall of data quality and governance, right? The whole garbage in, garbage out problem.
Profoundly true and acutely painful for AI. An AI model's performance, its reliability, it all depends fundamentally on the quality of the data it learns from. Insurers often struggle with the data that's fragmented across different departments, inconsistent formats, incomplete, locked away in silos. It's a mess sometimes. Before any serious AI work can start, there's this massive, often painstaking effort needed. Establishing data governance, meticulously cleaning and standardizing data, creating a unified, accessible infrastructure. Without that groundwork, AI initiatives will likely fail, or worse, produce unreliable results you just can't trust for big decisions.
And then there's the black box problem. That's a major worry, isn't it?
It is. Many powerful AI models, especially deep learning ones, operate as these inscrutable black boxes. Their internal workings are so complex, millions of calculations, layers of networks, that they aren't easily interpretable, even by the people who built them. This lack of transparency creates huge challenges for insurance. Makes it hard to trust the output implicitly, hard to debug errors, and critically hard to explain decisions to customers and regulators, which, as we'll get to, is often legally required. Hard to trust what you can't understand.
Okay, so those are tech hurdles. But then you have the organizational and cultural barriers, sometimes even harder to overcome.
Often, yes. The insurance industry, just by its nature, tends to have a conservative, risk-averse culture, deeply ingrained. This leads to significant cultural resistance, complex change management issues. Employees might fear job losses from automation. Managers might be reluctant to trust an algorithm over their gut feeling built over decades. Established workflows are just hard to change. Overcoming that inertia needs a concerted, top-down effort. Strong leadership, articulating the vision, communicating benefits, fostering a new culture that actually embraces innovation, data-driven decisions, learning.
And even if the culture shifts, there's the talent and skills chasm. Finding the right people.
Exactly. There's a global shortage of people with deep expertise in data science, machine learning, AI engineering. Insurers are competing fiercely with tech giants, fintechs, everyone for this scarce talent. Plus, there's a broader skills gap in the existing workforce. Underwriters, adjusters, customer service folks, they all need upskilling. Need to develop AI literacy to work effectively with these new tools, interpret outputs, collaborate with data scientists. Requires significant, sustained investment in training.
And even when the tech is there, people want to change, actually implementing and scaling AI presents challenges. The pace is slow.
Research shows insurers, while investing, are often slower than other industries in moving AI from pilot projects to full-scale production. This slow pace of implementation comes from that mix of factors: legacy systems, data issues, regulatory caution, cultural friction. It means delayed progress, slower ROI on AI investments, potentially falling behind more agile competitors.
And finally, strategic misalignment. AI projects just happening in pockets without a clear overall plan.
Too often, yes. Pursued ad hoc, maybe one department sees a quick win, but without a clear, overarching strategy tied to core business priorities and the long-term vision. A successful AI transformation needs a clear, cohesive roadmap, prioritizing high-value use cases aligned with strategic goals, budget, data readiness. Without that discipline, efforts get fragmented, fail to scale, deliver disappointing results, leads to this perception that AI isn't delivering.
So if you connect all these dots, the biggest barrier isn't just tech, is it? It's like the organization's own immune system fighting the change.
That's a great way to put it. Legacy IT isn't just a technical constraint. It embodies old processes, old silos, old ways of thinking. Replacing it means fundamentally re-engineering the whole organization. That feels threatening to existing structures, comfort zones.
And the talent gap isn't just about hiring data scientists. It's about fostering that collaborative culture. Getting traditional insurance pros and data scientists to work together effectively, understand the data, trust the models, but also contribute that invaluable domain expertise. It's truly interdisciplinary.
Precisely. So AI initiatives treated just as tech projects, without robust change management, talent development, fundamental process redesign, they're likely to stall or fail. They get effectively rejected by a culture that isn't ready. It has to be a holistic transformation, not just a tech rollout.
Okay, beyond these internal hurdles, AI in insurance operates in this really complex, fast-moving web of legal, regulatory, ethical constraints. AI is data-hungry, often uses intensely personal info, which immediately puts insurers under strict global privacy laws.
Absolutely right. Insurers operating globally face this patchwork of powerful laws. Key ones: Europe's GDPR, California's CCPA, and for U.S. health insurers, IIA2A. These laws have strict rules on collecting, processing, storing, sharing personal data. Insurers have to navigate them meticulously. Penalties are severe, reputational damage huge.
And GDPR, often seen as the gold standard, has core principles with big implications for AI, right? Like data minimization.
Exactly. Data minimization: collect only what's strictly necessary for a specific legitimate purpose. And purpose limitation: can't use data collected for one thing for something else without a valid reason and consent. These principles can actually clash with that big data approach, where AI models often thrive on massive, diverse data sets, forces a more targeted, thoughtful approach.
And then there's GDPR's Article 22, the right to explanation. That sounds like a direct challenge to black box AI.
It is. It gives individuals the right not to be subject to solely automated decisions with significant legal or similar effects. and the right to a meaningful explanation of the logic involved. This directly challenges opaque AI models. It compels insurers to invest in explainable AI, XAI, ways to make algorithmic decision-making transparent, understandable to auditors, regulators, and importantly, to policyholders themselves.
And Europe's leading again with the EU AI Act, a whole legal framework just for AI governance.
Landmark legislation, yes. It takes a risk-based approach. Strictest rules for high-risk systems. And crucially, many insurance use cases, risk assessment pricing, and life health, creditworthiness checks are classified as high risk. Means insurers in the EU or those impacting EU citizens face a substantial new compliance burden.
So what do these high-risk obligations involve?
A whole battery of requirements. High standards for data quality and governance for training data, extensive technical documentation for audits, high transparency for users about how the AI works, effective human oversight, high accuracy, robustness, cybersecurity. It's a very comprehensive set of rules aiming for safety, fairness, accountability.
And it works with GDPR, not against it.
Exactly. Designed to complement it. For example, a data protection impact assessment, DPIA, needed under GDPR can form the basis for the new Fundamental Rights Impact Assessment, FRA, required for some high-risk AI under the AI Act. It highlights how regulations are increasingly dictating how AI must be built, emphasizing ethics and consumer protection right from the start, demands more responsible innovation.
Beyond regulations, there's the huge ethical challenge: algorithmic bias and fairness. Yeah. AI learning and amplifying existing societal biases from data.
A pressing challenge. If historical data reflects systemic inequalities, AI models learn and potentially amplify those biases, leading to discriminatory outcomes against protected groups, race, gender, socioeconomic status, maybe through seemingly neutral proxy variables like postcode, a real concern for equitable access.
And even if it's not strictly a legal bias, there's this idea of unfair differentiation.
Right. When an AI uses factors that are statistically predictive but seem irrelevant or outside someone's control, like their purse code and local crime rates, to price a policy, even if legal, customers can perceive it as deeply unfair. Erodes trust in the insurer and the system. It's about perception and trust, not just legality.
So insurers have a big responsibility here, to be proactive.
Profound. Requires strong ethical AI governance frameworks promoting fairness, accountability, transparency throughout the AI lifecycle. Practically, that means regular bias audits of algorithm, ensuring diverse and representative training data, using fairness-aware machine learning techniques to detect and mitigate bias before deployment. It's a continuous effort.
And what about liability? If an AI makes a mistake, wrongly denies coverage, or a claim, who's responsible? The insurer, the vendor, the developer.
That's the complex accountability gap, a significant concern. It can leave affected individuals without a clear path for recourse. Makes it imperative for insurers to have crystal clear contractual agreements with AI vendors defining roles, responsibilities, liabilities, and robust internal governance with clear accountability for AI outcomes, including that non-negotiable requirement for meaningful human oversight and critical decisions. The human loop remains vital.
So this all leads towards privacy by design and ethics by design becoming standard practice, maybe even legally required.
Exactly. Evolving from best practices to mandates. GDPR started it with data protection by design and by default. The EU AI Act builds on it, mandating design requirements for high-risk systems, accuracy, robustness, human oversight capacity. Means fairness, explainability, data minimization can't be afterthoughts tacked on by compliance before launch. They must be core requirements integrated right from the start, from ideation. Represents a paradigm shift for tech and data science teams. Needs close collaboration with legal, risk, ethics experts from day one. Increases initial complexity, sure, but forces a more disciplined, responsible, trustworthy approach. Benefits everyone in the long run.
Okay, so a quick recap on the regulatory and ethical minefield. GDPR's right to explanation demands explainable AI and human intervention. Its data rules challenge collect everything habits. The EU AI Act's high-risk classification imposes strict compliance. Anti-discrimination laws and ethics demand regular bias audits, a dense but absolutely crucial landscape to navigate.
So to really succeed in this AI-driven world, insurers need a truly strategic approach. It has to permeate the entire organization. It's way more than just buying software.
Absolutely. Need to move beyond those isolated experiments, the small pilots that often fizzle out. Formulate a clear, cohesive, long-term AI roadmap, tied deeply to business priorities, identifying high-value use cases. And crucially, it can't be static, right? The AI field moves too fast. The strategy needs to be agile, Regular reviews, pivots in response to new tech, market shifts, new regulations, a living document.
And insurers absolutely need to build a robust, human-centric governance framework. The power of AI demands it. Clear frameworks, policies promoting fairness, accountability, transparency in all AI processes, data collection to decisions. Comprehensive governance covering the full spectrum, data privacy, regulatory compliance, those ethical concerns we just discussed. The goal: deploy AI effectively, profitably, but also responsibly, with human well-being and customer trust right at the center. So what does this all mean? Success isn't just the tech, it's the trust you build around it.
And the most successful AI uses will be collaborative,
Right.
augmenting human expertise, not just replacing it.
Without a doubt. The strategic focus should be automating the routine, repetitive, data-heavy tasks. This frees up your human employees, underwriters, adjusters, agents for the higher value work needing unique human skills. Empathy in tough customer situations, critical thinking on complex claims, creativity in product design, sophisticated judgment in strategy, unleashing human potential, not stifling it.
And underlying all this is data. Clean, comprehensive, accessible data is the lifeblood.
Absolutely critical. Leaders have to champion this. Without high-quality data, even the best AI models fail. Requires prioritizing those foundational investments. Robust data governance, strict data quality management, modernizing core tech. Moving from rigid legacy systems to flexible cloud-based platforms is essential for the demanding data processing and computing needed for advanced AI. It's the unglamorous but vital work.
And finally, maybe most importantly, it's about culture. Cultivating innovation, continuous learning.
Ultimately, yes. Successful AI transformation is less about tech, more about culture change, driven from the top. Visionary leadership, championing innovation, data-driven decisions, willingness to experiment, learn from failures, iterate quickly, needs massive investment in people too. Comprehensive upskilling, training to build AI literacy across the whole organization's C-suite to front lines, ensuring everyone has the skills, understanding, confidence to thrive in an AI-powered future, an ongoing journey.
So what we've explored today just makes it crystal clear. This transformation in insurance driven by AI and digital tech, it's not incremental. It feels truly existential.
Right.
That monumental shift from reactive detect and repair, waiting for bad things, to proactive predict and prevent. It's fundamentally redefining the insurer's value proposition, its whole relationship with you, the customer.
Insurers face a stark choice today, really unavoidable. Embrace this new reality, commit to fundamentally re-engineering their organizations, invest deeply in AI, or risk becoming irrelevant. Risk being overtaken by more agile, data-native competitors delivering superior value, hyper-personalization, incredible efficiency. It's a moment of profound challenge, yes, but also immense opportunity.
The successful, future-ready insurer. It won't just be a traditional finance company selling policies. It'll be an expert risk management partner with AI deeply woven into its DNA. Success will mean leveraging data and AI not just to pay claims, but to actively partner with customers, helping mitigate and prevent risk, offering real-time guidance. This future insurer delivers hyper-personalized, seamless experiences, operates with extreme efficiency via intelligent automation, wisely navigates that complex ethical and regulatory maze with integrity, commitment to responsible innovation, and masters human-AI collaboration, empowering the workforce, combining machine intelligence with human judgment and empathy for truly extraordinary results.
It's a challenging journey, absolutely. Fraught with obstacles, demanding visionary leadership. But for those with strategic foresight, the courage to transform, the rewards are immense. And it leaves us with a final provocative thought for you. As insurance shifts from being a reactive safety net to a proactive partner in preventing loss, profoundly changing how we manage risk, how might this fundamentally change our very concept of personal responsibility, and maybe the role of collective societal support in an increasingly data-driven world?
Food for thought indeed. Thank you for joining us on this deep dive.